All right, it is good to be back. Good morning, everybody. Welcome to the morning show. Happy Monday. I missed you guys. Did you miss me? I hope so. And if you didn't, just lie and say you did. Great to be back. We got a great one for today. New guest alert. New guest alert on the show this morning. A couple of weeks ago, maybe a month ago, I don't remember anymore. JC and Steve mentioned a good follow, Duality Research. So I reached out. Actually, thank you, Patrick, for the connection there, and we got him on the show today. So that's our guest. It's gonna be. He's got some really good charts. It's a great follow on Twitter. His link is in the chat or description. Check him out there. He'll be on the show at 9. We'll have Kenny Glick stop by, and we'll have Jason Pers, I believe, stop on the morning show. Jason, maybe, or Sam, one of them. But great to be back. Thank you, Yoj. I appreciate that. What up, chat? All good? Yes. All right. I know JC is in California, so maybe we can get him. I know it's like very early, so I don't expect him to be here now, but maybe he'll join us later on in the show. We'll see what happens there. But I got Steve in the house. I got Chartmaster Alfonso in the house as well. So here we go. Oh,
hey, buddy.
I missed you guys, man.
How was the beach?
The beach was great. First, I was in Chicago for a wedding. I think my last wedding, maybe for I don't even know how long.
You go through like this 5 to 10 year period where there's a wedding every other weekend, and then you get old.
I think it's closed. I think the window's closed. I think that was it.
Right. I'm happy for you. Made it. It's a tough time for a lot of people.
It's a lot of travel. The wedding window is shut. Jersey Shore was awesome. Weather was pretty good. We always go the week after Labor Day, so it's like super jammed the weekend of Labor Day, and then everyone goes home, right? Because like normal people go back to school and stuff, and I don't have school, so it's like a ghost town from Tuesday through Saturday, right? Just nobody's around.
Yeah, smart.
We were the only people on the beach as far as the eye could see on, I think it was Wednesday, I think.
That's great.
There was nobody around.
Where were you?
I go to Long Beach Island, which is one of the barrier islands off the coast of New Jersey. There's about, I don't know, a half dozen, give or take. That's every family in New Jersey has their spot, and that's my family's spot. So it was
a lot of options growing up where you do to hit the shore.
A lot of options. Yeah, definitely.
You could go up, you could go down, right? You could go to Long Island, you could go do a lot.
You could. I've never done that, but you could, I guess.
Long Island people tend to come down more.
They do.
They
do. Yeah. Those Long Island beaches, man, they get more crowded than those New Jersey beaches. They get packed. So I missed you guys. I know I missed a lot last week. Or maybe I didn't. I mean, I feel like I did because I'm up every day at 6 a.m. because someone needs to be fed, like some baby or something. I don't know.
Yeah.
So I'm up feeding him. So I'm watching Squawk on the Street at 6 a.m. every day last week, right? Because I don't normally watching TV, but you know, the house had cable, so I'm up watching, and I'm keeping up on things. I'm staying abreast. But that's what I was doing.
It was a mixed up week. Yeah, really. Healthcare shined, materials, right? So it was more of that rotation theme last week with some chop and with some good developments overseas, I would say.
And then there was a hullabaloo on Friday about the jobs number. Did you guys talk about that at all?
Well, it set off the bond market, that was probably the biggest deal, right? If you came back and said, hey, what was the biggest action last week? What do I really need to know? It was the action in bonds. Bonds engulfed like almost 2-3 weeks of action on the weekly candle that closed Friday. And it was like Gap City out there. If you look at something like TLT, it's like every morning, bang, bang, bang. And we're doing it again today. I think you got a nice little coil breakout here in these bond funds.
Oh boy.
And lower rates is, as you know, Spencer, a net positive for risk assets. And you're seeing it.
Well,
Rates
that's
finally breaking down. But home builders, banks, biotechs, they've been working. They all went out at new highs last week and probably the week before too.
I did. I was gone for so long that I think the first day I was at was that Friday, which was the day that China gapped up. Was that the day that
Yes.
Alibaba had the thing? That was 2 Fridays ago, right?
That's also a good example of messy but net positive action. China
Right.
last week. Messy,
Yeah.
but good.
Yeah. That I thought about messaging you. I was on a plane and I land. I look at my Baba. I'm like, oh my, what the hell happened?
You did the right thing. I am so freaking proud of you. When did you buy Baba? Because you
I bought it like like 119, 120 somewhere. I bought it like
you nailed it.
weeks
That
ago.
was the level 120. You entered perfectly. Now you're set up, beautiful, brand new primary uptrend, just confirmed, and you're already in. Do you want? How do you feel today? Do you feel as though you want to own more Baba-like stocks or less Baba-like
I wasn't
stocks?
feeling great about it on Thursday. I'll tell you that, Steve.
Hey,
this was always a trade for me, right? So
it shouldn't be. I'm gonna try to change your mind.
Okay.
Baidu is up 7% today. China has arrived. I wish you were here Friday. I did a fun thing. I went back and I watched the clip. I said, wow, I sounded angry when I did this. And the truth is, I was. I went through 5 or 6 charts, Spencer, comparing the something of China to the something of the United States. And I swear, these charts, if I took the labels off of them, you wouldn't know which one is which. Chinese online retail, US online retail, Chinese travel platforms, Chinese EVs, they all look just like their US counterparts. I think we should do the same.
That's a fun exercise because we all have our internal biases, and if you just let the chart speak for itself, and that's why I think maybe that's why JC and you like looking at charts without the watermark. I like the watermark personally, but you guys don't, and I guess that's why, because you let the chart speak for itself. And yeah, that's a good exercise. So
yeah, we don't fall in love with these things, Ben. We don't fall in love with these stocks. We just lend them. We lend them around. We don't love them.
all right, let's do a state of the markets here, and then we'll get into it because we got some charts and stuff.
Ooh, let's do it. Yeah.
How we doing this morning, Steve? I see a lot of green on my screen, at least in the crypto and commodity land. Everything land, actually, except for
I want to talk about that.
Yeah.
I'm in the wrong deck. Hold on.
Oh.
We got a new deck here. Link not working. Oh yeah, I know. All right. Very good. Yeah, Baidu. Let's just go right there. Do we have an updated Baidu chart? Because this is no good. Let's just show the Baidu. Start there. China's ripping this morning. Baidu's up huge. This is one of my largest positions. Been one of my largest positions. Had to be very patient with it. Up 7% pre-market to offer Chinese renminbi denominated senior notes in offshore transactions. I have no idea what this is. I'll have to look at it after our show today. That tells.
Oh, did we lose Steve? Uh-oh. Man down. Internet down. Oh, he's back. Okay.
Ooh, me?
Yeah, we're good.
What happened to me?
That was a glitch in the matrix. We're all good.
Wow. Some of these indexes, you know how we create our own baskets, so we have custom indexes. China's well represented in the fund space anyway, so we have plenty of vehicles and different index options that we could use for information. We'll make our own too, right? So we make, say, the Mag 7 of China.
That's right.
We talked about that. That's already resolved. Going higher, rounding bottom is in, the reversal, path of least resistance is already higher. So when you look at something like FXI, do we have like an FXI in the next chart? You think that's probably going to do the same. Our ARC of China custom index already resolving higher, already going. If you look at the best stocks in China, already completing reversals, already going. So at the index level, I think you're about to get that confirmation from something like FXI. Yeah, this is great. Still have a pretty elevated short interest. I don't overthink that too much. The base is there. This is the same chart, that we've been rewarded for buying over and over and over again for years now, for several years, this whole cycle. We're going to do the same thing with China here. So I'm big into Baidu. I'm big into Baba. Big into a bunch of the other Mag 7 names. JD has become my largest position right now. That's probably not going to be a long-term position, but we'll see. I'm open-minded.
Is anybody else talking about this trade specifically? I've seen people talk about, the banks and the bios,
They're
but
talking about
China,
it.
I
Yeah.
everybody was talking about it a few months ago, but I didn't see a whole lot of stuff last week about it.
You got to really pull someone's arm to get them to buy into this trend. The people who I like you, Spencer, I
Yeah.
literally plead with because I feel so strongly about this. I'm getting my dad to add a little more China. Like one's got to work, right? And then he'll trust it and he'll add another one. If that one works, he'll trust it. And I'm slowly getting him to add more and more. I had a member last week who shared with me, said, I've been trading your strategy for so long. I do everything you say. I put on a full position and everything.
Okay.
But China, he said, I do 50. I said, what do you mean?
Yeah.
He goes, well, it's China. I do half for those. And he said it to me like it was the most normal thing ever. And that's the problem, right? People
Dude,
don't trust this. They don't want this. And that's good for those of us who are already there, like you, Spencer,
I
just like you.
I think I like everyone in this exercise. I like you for going all out, balls to the wall. I like people like that person you're talking to who's only a half in. I like it for them. I like it for me. That's in, but very skeptically in, just a little bit, right?
There's a
I
lot
like it.
here.
I like it for all of us, right?
But there's so many. China's fun, right? We've told the story millions of times, but it's so true. They're the most like the United States, as much as nobody wants to believe that. They're the most market like the United States in terms of options and liquidity. We have the vehicles. We have the Tesla of China, the Amazon of China, the Google of China. You don't have the Google of anything else anywhere. What
All
was it?
right,
Yandex? You want to go buy Yandex, the Google of Russia?
you
No.
can't.
You want
You
to buy
can't.
the Mag 7s of China. They're some of the most powerful, dominant tech companies, growth stories in the world, and they trade at absolute garbage multiples as if they're going to zero. Baidu almost trades at its net cash value. That's why when things stop going wrong and people buy in, you get an absolute ripper like this. And then expect more of this. Charles D in the chat. For Baba, Baidu, etc. Is it too late? Some of us are already up 40, 50% in these trades, so it's not too late, but where you been? Right? All these people are going to trust us once price confirms what we're saying. That stinks for them. Great for me. Oh, well. Happens all the time. Happened with home builders this summer. Steve, you're crazy. What about the home builders? They're the best stocks in the market now. I don't know, Spencer.
Have you seen this news today? This OCTO, this Octo, this Dan Ives thing. Do you know about that?
Fuck. Tell me. No.
Yeah, Dan
Is
Ives
it
is
crypto? Is it crypto?
Dan Ives is pulling a Tom Lee.
Oh,
Dan Ives is doing his best Tom Lee doing his best Michael Saylor impression. I think is what's happening here. Tom Lee is the chairman. It's such a bummer that JC's not. Maybe we should say this for tomorrow because
I don't want to talk about it anymore. To be honest,
this is the world coin. This is the world coin, and Dan Ives is the chairman of the board of this company that's going to buy WorldCoin in their treasury, right? So this Octo is up 900% this morning. Is that what I'm seeing? 950.
dude.
It's crazy, man.
I'm friends with these people. I think Dan Ives is great. And frankly, I'm going to put my foot in my mouth on this. I received a number of emails since late last week. People don't like what I'm saying about BMNR and the things that I'm hearing from my Wall Street friends about these treasury strategies. Michael Saylor was on the networks this morning. Andrew Ross tried to ask him a good question. He said, what do you make of all of these new treasury companies that are copying you? Michael Saylor acted like he didn't know what he was talking about. He said, yeah, well, 180 companies have adopted Bitcoin, put on their balance sheet. Sorkin's like, I'm not talking about those. He
I don't
acted
mean
like he
Bitcoin.
didn't
I mean
understand
all
the
the other
question.
stuff.
Acted like he didn't understand the question. Here's the thing. The market's rewarding these announcements.
I don't know.
Not really rewarding them after the announcements, right? But if you measure from before the announcement, some people are making money doing this. I wouldn't touch any of these companies with a 10-foot pole. You have to be very careful. They're going to rip if crypto bull market, especially altcoin bull market, takes off from here. And then they're going to crash and burn. So if you know what you're doing and you have good risk management protocols, have some fun. But understand, this space is the space more than any other, right? Pot stocks already got blasted. Solar energy, how many are even left? The space is going to get absolutely destroyed in the next bear market. 95% of these companies will go away.
The key word there, into the next bear market.
Yes.
Whenever that is, right? It might be next week. It might be in 3 years.
Do you understand what this strategy is? It's the most elementary leverage system ever explained. They go around and do the circuits and they explain it like it's some complex leverage system. It's leverage 101. It's the kind of leverage they teach you when you take your 101 classes that is a big no-no and always ends badly. And now these guys are out here touting it like it's the next new thing. Like no one on Wall Street ever understood leverage. Like reteach us leverage. My God, I've never seen such a stupid group of people be fooled by such a stupid vehicle. It's a shame, really. I talked to some advisors. Are you in on the MicroStrategy thing? Yeah, why not? They don't even know what's going on. How about those convertible notes? They don't worry you? What convertibles? No, they're drinking the Michael Saylor Kool-Aid, Spencer. I'm long MSTU.
Is that the bear?
No, it's the bull.
Oh, okay. Well, like you can sit there and say this won't end well, and you'll probably be right. Right, most of this stuff probably will end well eventually, but does not mean there's not money to be made.
I'm rooting for them. I like a lot of these guys who are doing this now. I think more will come.
What if this is the future? What if having altcoins on your balance sheet that's our new normal, right?
Can I tell you why I'm annoyed by this, though? The real truth why this pisses me off? Can I tell you?
Sure.
It's gonna cause the next crash. It's gonna cause the next crypto bear cycle. And it's so annoyingly obvious. I gotta sit here and watch them build this house of cards just for it all to freaking crash and burn in a year. It just really sucks to have to watch this in real time and try to say nice things about what these people are doing. It's a real bummer.
It is a head scratcher for sure. But it's working so far. So what can you say? I don't know.
I should care less. I should just think about these things less. I'm going to stop reading the press releases. I'm going to mute the TV when these morons are on teaching me about leverage. I'm just going to really, really try to ignore it. I'm so long so many of these companies right now. I got weekly calls every week for the next 4 weeks in Riot. I'm ready to go. Let's melt these things up.
Your portfolio and your brain are giving you mixed.
They're constantly. It's a war, and it's like the devil and God are raging inside of me. Buy China. No, they're communist. I just want to make some money. Leave me alone.
That's why you're angry. It's because you can't make up your damn mind. And 1,000% now this morning for the Octo. Officially up 1,000%. All right, let's. Actually,
fine. Cryptos were good last night. Cryptos were great last night. We need more. Let's break these coils out. But crypto look, the longer crypto holds in these high and tight consolidation patterns, the more likely they're going to resolve higher once they finally resolve. Solana's been stuck in a 20% range for a month now. This is Solana. It's not moving. It's in a 30, 40 point range. It's very strange. So there's a lot of pent up energy in these charts right now. I'm expecting a move here, and I'm surprised we didn't get it last week with everything that happened with bonds and the interest rate sensitive areas of the market.
And yes, Jason, we are going to get Tom Lee on this show. That's a promise. Not this week, but it's going to happen. Right?
I probably won't be here for that, but we should. We really should.
Why not?
I don't know. It's just hard for me to have these conversations, Spencer. To be completely honest, it's really hard.
Tom Lee's he's been right an awful lot the last few years. I mean, credit to him, man. He's
great.
The only people that I can think of that were even remotely bullish in 2023, early 23, right, were JC and Tom, right? Maybe late 22, maybe late 22.
Maybe.
Yeah. All right. I saw that Octo thing. It's Dan Ives who's a friend of the show, and thought that was fun. So that's kind of like your headline of
Dan's
the day
great.
here.
There's
Yeah.
nobody I'd rather listen to about Mag Sevens and tech stocks than Dan Ives.
Oh, I didn't even realize that Kenny's here. Kenny, are you
Yeah.
trading this stuff today? I certainly hope so. Let's bring Kenny on. Before we do that, though, was there anything else that we missed on the headline front from today that is moving, or things that you feel like I need to know, having been away from my desk for over a week? Anything? Any high level thoughts that we have here?
For
No?
me,
Yeah.
sleepy Monday, quiet Monday, and really got my eyes on the cryptos. They had a sleepy weekend, showing some momentum now coming into the week. I'm looking for a big follow through week. Stocks look
Oh,
great. Breath looks fantastic. Fuck seasonality. Sentiment makes no sense. Like this is rally mode, dude. Press the gas. I think we're going for um, back half of the year ripper. They're going to chase these things. You're going to see a big leadership chase into year end, just like we've seen pretty much every year this cycle. The window dressers will be out, all that jazz.
hey,
I
shout
think it
out
starts any day now. I think it might have started last week.
shout out to Robinhood, right? Big boy time for Robinhood. S&P 500.
Yeah, I told you
Nice job.
MicroStrategy. Yeah, MicroStrategy. Give me a break.
Nice job. All right, we got Kenny here. I don't know what he's trading today. Maybe it's the Octo. Let's
Hey,
find out.
Robinhood earned it, Spencer. I got
Oh
no
yeah,
problem with that. Like green light on that. They earned it. These guys earned it. 2 years ago, I would have been like, "That's crazy. They're not gonna get." They've done a great job turning this company around.
they've crushed it.
Really good.
Especially if you compare Robinhood to like their peers, like the Weebles and the eToros, and there's probably at least one more that's publicly traded now.
They picked the right strategy, Spencer. They said we need a bigger mix of crypto. They made this decision about 2 years ago, and then they executed the fuck out of it. They made some great acquisitions, and now their mix of crypto, their revenue mix is a lot more crypto, and they're killing it. They came out, they told us exactly what they were going to do, and then they did it, and they executed beautifully. You got to love a company like that. Say what you want about Flad. He does look really weird, but he's done a great job these past couple years.
Yeah, that's $100 stock. Yeah,
good for them.
Good for them. All right, Kenny Glick in the house.
It's been a long time coming. They ain't come from my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hola.
Yo, Kenny. I'm sorry.
It's all good,
man.
It was a valuable lesson. My son learned a valuable lesson about life, about rooting for teams. My son finally puts on the parlay that I taught him. I was like, all you do is bet against the Jets, bet against the Giants. But he throws in, he's like, Dad, I'm going to put a 3-team parlay. I'm like, oh, because you could pick one game, right? It's hard enough to pick one game. The kids think parlays are where it's at, right? So he bets Washington and he bets Pittsburgh. Good start. But then he throws his own team in there, the Ravens, because it's a lock.
Oh, no.
Right, so a lock. He's high-fiving me. He's like, I should have bet more. I should have done this. I'm like, there's 7 minutes left in the game, and the Ravens are the shittiest team on the planet because they think they're good. They play well, but they still suck. And he went down. He lives down in my basement apartment now. I could hear the sobbing from down there, but he learned a valuable lesson. You never bet on a team you root for. And the Ravens suck. The Ravens suck, people. It's the worst team to root for. At least I know I'm going to lose going in. I know no matter how well they were playing yesterday, somebody's like, you just bet against them, right? I'm like, yeah, 220 plus Pittsburgh.
So we just talked about how Steve's portfolio is doing one thing and his brain says another.
Yeah.
You're talking about the exact opposite. Just go with your brain, go with your heart, right?
Yes. It's emotional hedging. First of all, the Giants weren't beating Washington, but most importantly, the Jets, once they gave you the hope, that's when you go to your DraftKings or your FanDuel live betting, and that's why we own SRAD, people. That's who powers your DraftKings live betting app. SRAD.
Yes. Well, it was a good weekend for your DraftKings and FanDuel accounts, if not for your heart. What about this morning, Kenny? Are we watching this 8Co thing?
You know what?
Just,
I thought it was just another O stock moving, but there's a whole story under there. I haven't even gone near it. I'm more on the open trade right now. And you want to hear delusional? So I was just on the show with Joel and Dennis, right?
okay.
And I said this
Good
open
guys.
trade, it's so comical that it's working because I've never seen such a concerted effort to move a stock since GameStop, right?
Right.
And I didn't think it was, and as the bear, I'm like, ooh, look at them trying to run this piece of garbage. I gotta look to short it. But then I saw this
Kenny,
massive
they'll run you out of the room.
yeah, I saw this surge of volume a couple of days ago, and I was like, you know what? Screw this. I'm joining in. I'm not getting in the way. I learned my lesson the hard way. So I'm still in the open from last week, and I was hoping it was going to break 7 on Friday, because we had some $7 lotto plays on. But again, I missed the octo. I'm not even looking. Was this another Bitcoin something?
This is for Dan Ives is now the chairman of the board, and they're adding WorldCoin to their treasury, to their company. So this is another MicroStrategy / Tom Lee's thing with Ethereum / this.
Sure.
Oh.
Sure. Now, you know what? I'm gonna stay clear of this one, but inevitably I'll look to short it tomorrow and the next day as soon as I get a borrow on it, because they've all come crashing back down. I had a lot of faith in the Tron, and that came crashing back down also. Where is that?
How's that ETHZilla? ETHZ? Oh yeah, that one came crashing down. Oh, okay.
Yeah,
that one from.
That's why Open actually has some room. And plus, it just broke over, a 5-year VWAP and came out of the Andy Dufresne. So everything I want to see on Open has happened.
So
and it's following through.
So let's talk about that for a second, because you usually only look at short-term charts, but when the situation warrants, you can zoom way out.
Yeah.
In Open Door's case, you got to go out like 5 years to
I'm
get
looking at the lifetime chart of the stock now.
Right. So 5 years ago, right?
Yeah.
Because it's back in 2020. Yeah.
Right.
Summer 2020. So are you using like a 5-year or like a lifetime VWAP of this thing?
I am. I'll show it to you. Hang on. I'm looking at it's basically I go on a weekly so I could put the chart on here for you. Hang on.
Okay.
Let's see. And again, this is the reason I bought the stock, because anytime anything looks like the Carvana chart, I'm in, because that Carvana trade, it started 750 and it went to 400. So
same guy.
Yeah. So I am a fan of that chart pattern. So you come out of the Andy Dufresne, and this basically came out of Andy Dufresne twice, and then you went right back into the trash heap. Inevitably, that's what I think is still going to happen. And that's what I was about to say. I was on this other show, and the uproar in the chat room, who are you to call this company worthless? Who are you? I'm like, okay, yeah, it's gonna go to 500. It's the next Tesla, baby. Yes, it's the next Apple. They've got it all going on. It's a pump and dump, worthless piece of garbage. But now that it's breaking out from 2, 3, 4, 5-year highs, you're going to go where you're going, 809. And if you break through the 8, you got a range from back in 2020 where it pivoted from. That's where the stock looks like it wants to go, to 10 1/4. So let it go to 10 1/4. And if it breaks 10 1/4, hey, listen, let's run the fucker to $13. Still doesn't change the idea that this is still the same company, and it's going to be a zero. It's going to be a zero. The stock will be at zero within a year or two. It doesn't matter. Who cares? Make the money now. That's what the point was of the whole, what I was saying. You want to make money on Octo, get it right now. It broke 15. It's going to go to 20. Inevitably, it's going to zero. I mean, come on, people. What are we doing here? But you know what? This is the game. That's why this is the greatest trading environment in the history of ever. You've got an Octo and an Open. You get 15 of these every day. And you've got this wonderful earnings report trade that I've been doing, like the Broadcom and the Lulu on Friday, which pays for these crazy stocks. So again, the whole premise of my existence, we've gone back to 1990 completely now. So we would make money day trading, play with these crazy stocks, and then buy the Qs. The market would never go down. We've come full circle, baby. And the Jets still suck.
What a time to be alive. Nothing changes. Time is a flat circle. Kenny Glick is at hitthebid.com. That's his live trading room. He trades there every single day that the market is open. You can trade along with him by going to that link. Kenny will see you at noon for your Tuesday show, the long and short of it. But in the meantime,
today's Monday, right?
What did I say? Tuesday?
Tuesday. I'll be there Tuesday too. But hey, listen,
I don't know.
I got something exciting going on, friends. everyone's getting into this crypto thing. I mean, I've been in since 2017. Some of these coins, I'm getting my own coin. So I talked to a couple of guys, and we're doing it the right way. I got the best name for it. I already have the community built. I got people that are oversubscribed to it. It's going to be a huge, and I'm not even joking right now. Look at my face.
How can you be oversubscribed to crypto?
Because there's going to be only a finite supply and a huge demand. Huge.
What, like
it's going to be huge. And if you buy my coin, you get a free breakfast with my wife. What? All right.
Are they backed by silver?
Yes. So, yes.
That would be a hit.
I'm not even joking. I just had over the weekend, I talked to 3 crypto guys who have brought coins and have done very well. I got to get in on this. I got to get on this.
Boy.
Bring it back. Fuck Bretton Woods.
It's going to happen, baby.
Crazy. See you, Kenny. Oh, dear God.
That's awesome.
Kenny's going to have his own crypto. There's going to be 12 coins or whatever his cryptocurrency is. And it's going to... What's wrong with Kenny Coin? I thought Kenny Coin. He says he has a better name than that. All right.
Any of my colleagues here, if they told me this, like if JC, he has this conversation we've had, I'm gonna do an ICO. We're gonna launch a token. I said, no, please don't do it. Yeah. Kenny, it's the right thing to do. Like Kenny, I'd be like, fuck you.
This was a joke like 6 years ago, 7 years ago. We were talking about this stuff.
Like I would green light this from Kenny and only Kenny. Sure. It'll probably be a hit. The rest of us, we couldn't pull it off.
That's right. That's right.
You know.
All right, let's bring on today's featured guest. We have Alex Fatio from Duality Research. He's sent us some great charts. Does great work on Substack and on Twitter. And this is the first time on the show, so chat, be nice, and let's bring him out. Bring him out. Where is my video? There it is.
Cool.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Alex.
Thanks for having me.
Hey, how we doing today?
Very good, very good.
Thank you for joining us. You got a shout out on the show a couple weeks back, and it was demanded that we have you on the show. So here you are. Where are you based out of?
Zurich, Switzerland.
Oh my goodness! How are things over in Zurich?
Good. It's getting colder, but I guess with you guys.
Are you paying as close attention to like European markets as you are U.S. markets because you're over there?
Look, at the end of the day, the U.S. is the leading the benchmark. So the thing is, obviously this year has been a bit different. Even though, a lot of the moves that you guys speak from your perspective, thinking in dollar terms, is really, the move in the dollar, right?
Yeah.
So, for example, are up a bunch this year. For example, 20% in certain countries, but it's really just 8%, in the local currency. Right?
Yeah. All right. Let's bring up some of your charts here. Let's start with slide 4, if we can find.
Yeah. Hey, what's up?
What up, Steve? We have this high yield credit spreads, and this is an interesting chart. There's a lot going on here.
Alex, people are talking about you. Do you know this?
I guess it's good.
In the best ways. In the best ways. I was out to dinner a couple weeks ago with some of the Ritholtz guys. They're like, they think we're the chart people. They're like, do you know the Duality guys? Like their charts are so good. And it was like the third time I've heard it. And me and JC were like, no, actually, we're going to have to get to know them. But you guys are crushing it. Do you make all these or do you have a team?
It's just me. It's really just me.
Wow. Good for you. All right. Tell us what you did here. A little risk on action.
Yeah, look, I think, I think when we goes down, we want to pay attention, right? And I think we're seeing that, the S&P, still trending higher, but, not at the rate of change we've been seeing. Obviously we cannot go on like this forever. And especially now with tech also taking a breather, I think we really want to keep a close eye on what we're seeing. So for example, here, looking at high yield inverted. So we get the risk on, risk off direction. And I think it's still for this market to at least move sideways and probably higher. And the same thing from the equity market by looking at discretionary versus staples, where it looks like we're getting the same message.
Yep.
right?
So are you basically overlaying these because you expect them to move in similar ways in the same direction over time?
Well, mainly because I call them the risk sniffers. Really, the credit
Love that. Yeah.
they a lot more sensitive, right? So I guess what we tend to see in discretionary versus staples, we can sometimes it can also sometimes be flow driven. So looking just at high yield credit spreads really gives us a actual risk sentiment view.
What are you using for the high yield, like triple B or?
Uh, just I use them.
One of these Bank of America high yield index option adjusted spreads, right?
Mhm. Right. And if you pull up the next chart where I show IG spreads, the S&P 500
Right.
obviously is our investment grade there, not because of the size. This has nothing to do with it, but it's still about credit quality, and they tend to obviously have a higher credit quality here.
Yeah.
And what I try to show here is that whenever we're still below 100 basis points of spreads here, there's not a lot to worry about, right? And I color coded the chart on top, the S&P chart, and you can see we're at 77, so well below 100 points. And I think this, speaks for the, the optimism on U.S. companies, U.S. growth.
This is a
I
great
love
chart.
I love the stoplight system and the color coding here. It's beautiful. It makes sense. It speaks to me. We think of credit spreads in the same way, where it's not like a complete disaster, but shit, if they're elevated, if we're in the yellow or the red zone, it's one of the first charts we're all looking at every day. When credit spreads are confirming, it's like I sleep better at night. I don't worry. I buy risky stocks. I buy a bunch of call options, but it's all about the bond market saying, like, you could do that, go crazy. And right now, I mean, have we gotten a bigger green light from the bond market, especially with the way rates are now just really resolving a range lower? I think all things equal, risk assets want rates down. They've been telling us that. You could see it in the action. And the bond market really, for a bullish market participant right now, is giving them everything they could want. Would you agree?
Yeah, I mean, also pay attention to how they most of the time they trough first before the S&P tops, right? It wasn't really the case that as much as in the past when we had the sell-off just recently, probably because it was really
Yeah.
a driven sell-off.
Breaking up a little bit, but I can still understand you. I want to go to the next one, tech relative, because we just went from the risk appetite, right? Discretionary staples, classic risk on indicator. Tech S&P 500, I would say in the TA community, people are split on this. Is this like a risk appetite indicator in your mind? Does tech have to outperform for a healthy bull market, or are you trying to, I guess, pull different information from this?
No, yeah. So this is exactly what I'm trying to show here. The S&P, as we saw, last year, it can move higher very well when technology also performs
Love that.
the last time,
Yep.
and in July, August, the relative trend here did break out to new highs, and on August 19, we got below that. Right? What we've been saying, or what I've been saying, is that as long as we're below that, I think it makes sense to broaden out, look at other opportunities. I think that financials, small caps, working very.
No, I love it. So this ratio, you're basically using this for how should I be positioned? Should I be positioned like the indexes? Or should I be doing different stuff, sniffing around the small cap space, sniffing around regional banks and biotechs, right? Doing different things. That's really what this ratio is good for, no?
Because that doesn't bearish on technology. I think technology is simply, consolidating those huge gains, moving sideways. And probably once they break out again, take the next leg higher, you probably want to shift back to technology. But right now, it's giving us still it's just a simple signal of, hey, look beyond that 33% S&P market cap slice.
Have you ever zoomed way out on this ratio too? Because I know you're showing this big resistance zone here just based on last year's highs. You take it way back, like forever. This is a major resistance zone in a lot of these growth versus broader market ratios.
Yeah, so pay attention. I use the official index, the S&P 500 technology index, because I think that the XLK has really done a bad job over the last 2 years in tracking.
Interesting.
So I know that AC likes to show the chart with huge resistance, but if you look at it, using the actual index, which tracked NVIDIA last 2-3 years a lot better, really shows that we're past that resistance from 2000.
A lot of people don't understand the point that you're making. The indexes and then the funds that are based off of said indexes don't always look the same due to exposure caps, right? Allocation differences, reweighting lags.
Yeah.
Pretty different pictures. What kind of irked you about XLK, the big NVIDIA weighting?
Yeah, I mean, it's funny because if you overlay a lot of those official indexes with
There it is. That's the one we're referring to, everybody, just for context. Go ahead, Alex.
Yeah, exactly, yeah. And if you do this with most other, like let's say with the XLP, with LF, XLP, or any one of, you can see that those are all very well intact. They overlay perfectly, basically.
Yeah.
And technology is really the one that hasn't been doing that anymore, right? And that really started basically in 2023 when NVIDIA really kicked off that massive AI bull run when they beat expectations.
There's really no other. Yeah, it was crazy. There's no other sector in the world that has this much market valuation moving around on an almost daily basis. Like we're always making the joke, like, "Oh, this is the biggest market cap gain ever. It's the biggest market cap loss ever" when these companies report. And yeah, it could make it hard to track, I guess.
Yeah, exactly. Yeah.
Next
And
chart.
yeah, so maybe you saw that I labeled August 19 when we dropped below that previous resistance in the technology versus S&P 500. But better plot chart that where so basically 1-day price returns for the S&P 500. Yeah, exactly this one. So
What am I looking at? Explain this. What's the scatter?
So it's basically I'm looking at daily moves in the S&P 500, and I look against how many stocks are advancing.
First breath. Sure.
So basically, the curve, as you can see, is when the market goes up, we tend to see a lot of participation. That's why we go up to the right. When we go down, we have a lot more decliner stocks. That's why the most of those dots go left to the downside.
Wow.
So to the top left and the bottom right. And what we saw just August 19, where we broke below that previous high in the relative ratio.
Hey, Alex, can you just try taking your AirPods out? I want to see if that'll maybe make your connection a little bit better.
Okay.
Yeah, I want to just see because we hear most of what you're saying, but I suspect
it's choppy.
It's a little choppy. So maybe if we just remove the AirPods, we can just see how that goes.
Okay, let's try this.
Choppy, like.
Yep.
Nice.
Let's try that.
Is that better?
Yes.
Okay. So basically what we saw here is that on that day, we declined by, I think it was 0.6% on the S&P, but we saw more than 200 stocks advancing than declining, right? And we only had 2 other days with better breadth and bigger loss. And in fact, if you look at how many days where we had more than 200 names advancing, then declining, when the index was down, it's just 9 times since 1996, right?
So what's the takeaway there? We are seeing similar things in like our short-term rate of change where we're not even considering breadth. We're looking at like rotation days, and tech on a relative basis, semiconductors on a relative basis have had some of their worst relative performances, in a single day session of all time since last summer, really. Been seeing that a lot. like these big days,
Yeah.
just big rotation out. Rest of the market absolutely fine. And I look at that action and I say, they're using the winners as ATMs. That's cool.
Yeah, exactly. I mean, in particular this day, I sort of see it as a breadth thrust within just how many names have been moving against probably those mega cap tech stocks, right?
Yeah.
So yeah, I think this is making things interesting. But the group that I like the most here right now is really small caps. So if you could show the next chart, exactly, showing here basically small caps against large
This
caps.
is great. This is
Right,
the
yeah.
breadth I care about. This is the real stock market. This is what's really going on. Nice tactical base and breadth confirming. No?
Absolutely. So last week again, Russell 2000 outperformed by 75 basis points. And last Friday, we closed with the highest number of stocks making above the 200-day moving average in almost 9 months. So it's exactly what you want to see. And then the next thing is, positioning. So if you show the next chart,
Cool.
here basically, if you focus quickly here on the middle part of this chart, we simply show the rolling 21 days flows for all the small cap ETFs out there, right? And what has been very interesting, is that ever since we entered this year, 21, so 1 month flows have been negative up until now, right? And that has caused, if you focus now on the lower part of the chart, where I show cumulative flows for every year, we can see that close to $25 billion have gone out of those ETFs, and we are up 7.2%. So there's a lot of things to chase here for a lot of people, right?
Right.
And
So
Mhm.
yeah. Go ahead.
What does that mean exactly? Does that mean that there's room for this to run?
Look, I think as long as ever since we bottomed, there have been a lot of charts showing positioning is bad. No one is positioned, and that's a huge pile of potential. But as long as nothing is happening, probably nothing's going to happen, right? And right now, what we're starting to see for the first time in basically 9 months, 8 months, though the rolling 21-day flows just gotten positive, and I think this will only accelerate. Considering that the Russell 2000 is 2% away from all-time highs.
There's a little base in that small cap ETF flows that looks a lot like small caps on a relative basis, really. Do you know Todd Sohn?
Yeah, I know that he does a lot of that work, tracking those.
He's our resident fund flow guy. He really knows the flows, and he brought the same data point in a different chart last week. And I always struggle. I know what to make of it. It's sentiment, right? But I always wonder, like, how exactly do I use this flow data? I wonder how actionable it is. And he just made a good point. He said, look, small caps are out here doing what they're doing, nice performance, outperforming, and flows aren't there, right?
Yeah.
So that's just bullish sentiment. Dry powder, people on the sidelines, call it what you want to call it. But if the flows actually turn positive, net positive, if this red line on the year to date can start ticking higher, it would only support this bull run more. So I think all things equal, Todd was like, this is good. This is bullish. Be better than if the flows were jacked to the upper bounds of the pains down here.
Is anybody besides me stunned that the IWA or RTY had net positive inflows all these years? I'm just surprised that it had more inflows than outflows.
Even through the bear,
even like this entire cycle, this whole time, right?
And now it's this. I struggle with this data. What else you got, Alex? It's the next chart.
Yeah, so I think just to back this one up, I also show here the asset managers and hedge funds positioning in Russell 2000.
I've seen this one.
Yeah,
great.
so the lower part shows just the net number of contracts, and the upper I try to show the notional value and try and overlay with the price data, right? So we can see very well that the gray chart the gray line that is the Russell 2000 bottomed and is close to making new all-time highs, and then you look at the blue the bluish line that shows the futures positioning, and it just continued to go down, right? It didn't stop. And now here we're seeing the same thing. We're starting to see this uptick, right? Because we were recently below 10 billion in notional value, and now we're only -7. And this is very just hypothetical, looking at this gap, assuming that the line catches up to the gray line again, and that would be a 15 to 20 billion dollar gap, right, to chase, right? And I think this group of stock making new all-time highs is only gonna really accelerate asset managers to increase exposure and hedge funds most likely to close those shorts.
So speculators pretty short out here. Well, all this is
Absolutely. Yeah.
You guys are making me bullish over here. Sheesh.
Positioning supports the action we've seen in small caps. Sentiment supports the action we've seen in small caps. And I would even say, breadth and risk appetite are supporting the action in small caps. We really just kind of went through all of that in sequence, telling a really nice story here with these charts, Alex.
Yeah, and I think, keep in mind, once they break out, everyone on TV is going to be talking about this. And
big
I think
chase.
a bunch of money managers are going to be like, oh, wow, that's happening. I haven't been tracking those anymore. And they're going to chase it. I assume, right?
Nobody owns small caps. Nobody owns China. Nobody wants the cryptos.
Can
want
I
all
ask,
three.
what would be the instrument here? It would not the index, right?
Go ahead right away with the IWM. I think
Okay.
definitely
Depends who you are.
One way to play it.
Sure.
Yeah. All right. Cool. I'm into it.
These are great.
Yeah.
Alex. What else we got here?
Awesome. No, I think that was the last one.
That's
yeah.
awesome.
Alex,
what are some groups that you like? Is it safe to say you like the small cap theme into the back half of the year after all this? Or?
Yeah, the thing with small caps, for me, it's really just a trade. I mean, looking at the last 5 to 10 years to make the case for, a huge allocation to them, I think it's
these things.
Yeah, it's difficult. Over the longer term, probably you're still better off with the large caps, right? But this is a flow-driven. This could be a flow-driven rally. So I think that for me, it's a trade. I'm looking probably like 3 months from today. Well, which basically gets us to the end of the year, right? We're already in September, right?
How about, are you favoring any sectors? Like if we were just to focus on like the large cap sector, spiders, how are you feeling today with the tech or growth versus value situation that's kind of playing out?
Yeah, so a year ago when the same thing happened, financials outperformed, discretionary outperformed, industrials. I think that financials look now really, really interesting. You have a bunch of large banks that have a huge, or probably already broke out, like let's say Bank of America. If you look at discretionary, most of it is really just Amazon and Tesla, and I think there's probably not better charts than Tesla and Amazon right now, right? Especially Amazon. So I think these are, a couple of good names and subsectors or sectors where you want to be positioned as long as technology remains below that previous high.
I love it. This is great. Spencer, you got anything else for Alex?
Not really. Honestly, this was awesome. We look at charts all the time on this show, and your charts were still a breath of fresh air, right? So
Glad to hear that.
yeah, we'd love to have you back. Let us know when you're stateside, Alex.
Will do.
But again, if you guys haven't checked out Alex's work, the links are in the description, Substack and Twitter and all that jazz. Great stuff, man. Thanks for coming on. Appreciate it.
Yeah, thank you guys. Thanks a lot, huh? Take care.
All right.
Do you see Baidu right now? Holy
no! I'm too distracted with the small caps. Sorry. I was only room for one thing at a time in here. And right now, it's all small caps and nothing else.
My broker can't price these calls fast enough. Holy cow!
Wait. There was a headline, but you read it fast, and I didn't quite understand it. Let's go back and look and see what it was.
I don't understand it. We got to hop so I can read this damn press release.
Wait,
Why are my brokers totally pricing these calls wrong?
unsecured notes. What? I don't know. Huh? I don't know what that. All right, I don't know what that means. We got Jason person. Let's bring Jason out, and then we'll wrap it up. See if we can get out of here in the next few minutes. But Jason, you got some charts for us? I hope so.
Hey, Jason.
Hey, what's up, guys? Great
What's up,
segment. That was cool.
How we doing? Yeah, awesome charts from him.
Thanks. What do you got for us today?
So I did bring some charts, obviously. So if you go to the deck, I'm on 11 through
Okay.
14, 15.
12. Okay.
Got them bonds, bro.
That's at the end, 16. We're getting to that. We're getting to that. So, everybody, first off, everybody probably wants to hear about gold, victory laps and so on. I hate victory laps. So most of the time, like when there's something that's like, hey, I've done this really well, I'm bad at it. Just as a trader, it's a trading mindset, not very good for promoting. Trading mindset is, hey, we're in the trade, we're riding it long. Let's see where it goes. And that's really what I'm looking for here. I think this thing's got legs. I think the things that continues to happen over and over again in these markets is that every time gold slows down, everybody thinks the whole market's going to slow down. Basically the whole precious metals market's done, gold's done, and so on. And every time gold slows down and the miners are leading, that's a time when you want to still stay long. You still want to stay long. That's basically telling you that there's risk on in the sector. And that's what we saw when gold consolidated. So, basically that's still heading up.
That's your discretionary staples of precious metals.
Yeah, exactly. Gold is a discretionary staples, and then basically you got the risk on areas in the miners and the silver miners, and like you're seeing the explorers moving, like basically stocks that are just nothing, garbage, don't have any earnings, don't have anything, but they're moving like crazy. Like that's where the money is going to be made right now. So I think it's really a good time to get junky in the space. Continue to look at the explorers, the juniors, the silver miners, and so on. If it's got silver in its name, it's probably going to go up. Silver's also looking really good, closing above 40. Probably head to 50 pretty soon. So I really like the way this precious metals market's still shaping up.
Love it, Jason. It's been the best trade this whole cycle. Some of you guys who've just been sticking with it and riding it, I'm jealous. I probably should have done more there. Gold miners are just absolute fire. Do you like AG here?
Yeah, I like AG.
It's got to go though. It's got to start to look like the others.
It's got to move. Same with the uranium miners. There's like UU. There's a bunch of them that are starting to look really good and shaping up. So across the mining space, whether we're in copper miners, uranium miners, another thing that's probably going to be interesting. If it has mining in the name, it'll probably go up. But yeah, there's a lot of interesting stuff in the market right now, especially in the mining sectors.
This HBM base is going. Copper juked me out, and now they're all leaving the station.
It's very interesting. That's very interesting because you weren't wrong to be concerned, but just looking at the miners under the surface, it's the same thing we saw in gold. It's like gold went sideways, copper in the United States crashed, and then basically international copper miners went up. COPEX is at a new 52-week high. It's about to take out a new high. Go to the next slide. I might be backed up, but it's 13 on mine. It might be 14 on yours.
Okay, the XME?
Yes, XME.
Okay. What? 1 second.
You're good. Buffering.
Yeah, exactly. There we go. Okay.
Wow. Holy cow.
But yeah, look at that thing. I mean, that's a huge base breakout. That's new all-time highs. It's just starting. Now, once again, it's a tough sector because Steve, you and I talk about this all the time, which is these sectors are not like the best well-run companies in the world with the biggest profit margins and so on. Like these are very cyclical sectors that go up in very specific conditions. This is right now we're in one of those conditions that makes a lot of sense to be in these areas. And so I think this is going to just continue. I'd say to year end, you know, once again, I'm a trader, so if it starts to break trend, I'll come back on here and say nope, no more. But I like the way this looks. I think it's all shaping up the right way. We got gold miners moving, copper miners are moving, metals and mining is moving. And then the next chart, just hop through the deck. I'll go through these real fast. So the next chart is energy and TLT. Now, one of these has to make a move one way or the other. They're not going to move together. There's a lot of people who are kind of looking for it long run to move together. Now, short-term periods of time, there's bounces that can happen at the same time, sure. But if you want a real trend in energy, you want to see bonds going down in price. If you want a real trend in bonds, you want to see bonds going up in price. You want to see energy going down in price. Not this consolidation that we're seeing, really a downtrend in energy. So, you know, this is, to me, this is one of the key things to keep on everybody's radar as something that when this moves, if energy starts to go, I would start to really bet against bonds heavily, and vice versa. If bonds start to go higher and start to break out of this range that it's been stuck in forever, I would start to think that energy is going to go lower. So I think this is something that should be on everybody's radar. It's the Remex is flexing. Like, yes, there's a lot of good ones out there right now. A lot of these stocks that are, whether you're looking at lithium miners, like once again, it's just miners. Like anything mining right now is just looking pretty insane.
No, I appreciate this analysis. I know you saw my question in Slack last week for you and Sam. I can't stop thinking about this, but here's what you didn't mention. What are the chances that this relationship just breaks?
I would be so surprised. That would be the most surprise. But once again, markets love to fool us, right? So like that would be the most surprising thing.
That's like where my head's at, because I hear you like 100% on board with what you're saying. If one of those goes up, the other one's going down, and I'm thinking and I'm looking at the action. It's not what I'm seeing though. The XME and energy materials have been the best group out here. I'm over here pounding the table on the interest rate sensitive groups, the ones that typically do well when rates come down. But fuck, the ones that do great when rates go up are zooming too. So I'm sitting here like, what's going on in bond market? Is something breaking here? Relationships changing? I don't know.
It's something about the, you know, to me, it's the yield curve. It's, if we're looking at the short-term yields, that's something, right? So if we're looking at the short-term yields moving down, that's going to matter, but it's going to matter in a very different way. It's almost mattering in a way that's, okay, what would happen if there's more liquidity in the market? What has Powell been saying for the last year? Why can't he lower rates? Well, because inflation would come back. And I think they're sniffing that out right now, that inflation would come back. So once again, it's not that, you know, we've talked about this before. It's not that the 30-year can't come down for a moment.
So it's almost like, Jason, if rates come down, it means rates go up.
Yes. Yes. That's exactly what I'm saying.
Oh, God.
Yes. It
Good
sounds
luck,
silly.
It was helpful.
It sounds silly, but listen to this. So we'll explain this a little bit more. If you lower rates, and like Powell says, you know, inflation get out of control. It's the same thing I see. So you lower rates, inflation gets out of control. But once again, there's two different parts of the curve. This is where everybody gets confused. This is why bonds are confusing.
I'm confused right now.
I'm sure everybody is. So I'm trying to lay it down a little bit, Spencer. Give me a second.
All right.
So if we lower the short end of the curve, which is where the Fed rate is. So the Fed rate is the 3-month bond prices, bond yields. So basically, if you're all the way in the short end of the curve, 1 month, 3 month, 1 year, even 2 year, the Fed puts a lot of pressure on that. Now, if you're in the 30-year, that's really driven by growth, inflation. If it's seeing a slowing growth cycle, like you're going to see TLT move higher. If you're seeing a inflationary cycle, you're going to see TLT moving lower. So that's the long end of the curve. So the Fed doesn't control the long end of the curve, which is why you see these divergences. And anybody who's seen my charts over time, like I always highlight that one where it's the Fed rate and the 30-year. So interesting point to look at, Spencer, which is when they started lowering rates last year, the 30-year started going up immediately.
Right.
And so like that would be the most surprising trade of the year here, which is, let's say the Fed comes in September and they lower rates. I'm pretty sure they will. And let's say the 30-year breaks out that same day. You know, I wouldn't be surprised by that by any means. Yeah. But once again, I think it's just the biggest thing me and you are still looking for, Steve, is the yield curve is still steepening, which is still good for risk on, whatever way you look at it. So I still think that that's still a good area to look at. I think it's still saying that the stocks are going to move up. Gold is probably the sure bet here, because you could go up in the environment where interest rates go down or up. So I'm definitely staying along the gold miners. I definitely like a lot of these cyclical sectors, and especially the metals and mining.
I love it, Jason, and thank you for slowing it down and explaining that for everybody.
Because you were right. Like simply put, they
I
go
know.
down, they go up.
So, listen, there's a lot of rates. Which ones? I guess Jason makes a really good point. Billy Cunningham says in the chat, you got me conflicted. Join the party. I'm long energy, but also long TLT. Me too, Billy. Okay. We don't know who's right yet. That's okay for now.
This is like a left brain and right brain situation.
Yeah, this is like a fuck it all kind of conversation.
Well, sometimes the best trades happen sometimes when you're looking at something like this and you just put on the position and you're like, okay, one of these are going to win. I don't know which one. And either one doesn't look like it's going to crash anytime soon where you're going to get smacked.
And he makes a good point. Some of these energy companies are so depressed, they have bond proxy action built into them due to the high yields. And those ones will be insulated in the event that long bonds really start ripping.
Yes. And look at another one to look at is DBA, the ETF, the agricultural ETF. It has a lot of bonds in there as well, short-dated bonds. Yep, they hold a lot of short-dated bonds in that ETF.
And then
at certain times.
futures.
Yep. And futures, and they're actually one of the only ETFs where you these days in the United States where you can get exposure to the softs as well as the grains.
Yeah,
so it's a really good ETF if you guys are looking for an ETF to get some agricultural exposure. And they go back and forth. They really trade it well. Like sometimes when short dated bonds look really attractive, they'll start being heavily in there. And most of the time when they're looking at these like commodity cycles and coffee and cocoa and whatever's moving, they're going to be heavier in those sectors.
That's interesting.
Yeah.
Yo, what this Planet Labs? We decided this is not Planet Fitness, or is Planet Fitness up 15% today? I'm up 15%.
Planet Labs is a space company, man.
This is space.
Yeah.
Huh?
All right.
What?
All right.
We're 11 minutes in here on a crazy Monday.
Yeah.
Dina has arrived. Check your inboxes. I'm going to send everybody a really obnoxious email. It's going to be, Jason, think about it. It's my last effort appeal to the Never China crowd. I just feel like while this thing is leaving the station, I've been obnoxious enough and I'm going to quit. I'm basically like, I made my point clear. I've been loud. People hate it. I get nasty emails about how much I like China. I don't know how China hurt these people, but I'm going to do one more effort. And the way I'm going to take a different approach. I'm just going to say, kill your priors, forget what you think you know. And I'm going to show them the charts, Jason. I'm going to go down the line, like 6 different charts, the China or, the Chinese version of this, the US version. They're all going to look the same. And I'm hoping I could change some minds, because I used to be one of these people who thought I knew everything. And the chart would say one thing, but I wasn't wrong. The market was wrong. I was right. And I just kept losing. Luckily, I found technicals, and now I let the charts do most of the hard thinking. I don't judge these companies. I don't think about communism or CEOs getting kidnapped. I just think about making money when I look at these charts. And I think if other people can do the same, boy, the alpha that could be generated in China over the course of the next several years, I think the runway here is massive. I haven't seen a fat pitch like this in maybe a decade. I mean, I'm just going to try one last time.
I love the international trade. I think it's one of the best trades everybody continues to overlook because they have biases about whatever, communism, China. I can't invest out of the United States. Look how good the United States has done for all these years. You know how many years in the this is recent too, where there's been countries that have massively outperformed the United States just in a year time frame.
Well, yeah, but then what happened the next year, Jason?
But wait, here's the question. Who on here is buying and holding? Like, we're all traders here. So what does it matter? Like, at the end of the day, it's like, what does it matter? We're all trading. Like, yes, if you want to say,
it's like what are you talking about?
No. To his point, though, I used to have fun looking at like the month to date, like the trailing 4-week performances for ETFs, and 1 month like Greece would be number 1, and then the next month Greece would be at the very bottom. Right?
Yep, and that's what, like 2019, Greece was number 1.
Right.
Like that's crazy to think. And like now this year, Greece is finally number 1 again. But the whole trend looks very different, and that's why Steve, I think, is pounding the table on it now, because the trend, like across the board, not every single country, But if you're looking at China, if you're looking at some in South America, you're looking at Southeast Asia, you're looking at Europe, like this is completely different than we've seen in the last 10 years. So it's probably a great time to really start getting interested in this. We've been talking about this for what, 2 years now, Steve? We've been in this trade at least 2 years, and everybody hated it at the beginning. And what's funny is Steve and I were on a podcast before this trade even happened. We're both like, I don't think we could invest in China, man. It just looks terrible. And we weren't talking about China. It was the chart. The chart was just in a downtrend.
I came home from Hong Kong two years, more than 2 years ago now. I was a never China.
Yep.
Literally. Yeah. I had to like go for a walk, sit, meditate, like think on myself and be like, what the fuck's wrong with you? Sandra Bella, good point. It's just that they lie. Sandra.
Yes, that's
Sandra. They're all lying.
Yep. All the data is lying.
Every day another company reports earnings, holds a conference call, and lies straight through their teeth. Every day it's happening. There's just different levels of lying.
There are degrees of lying,
all
right?
Liars. Don't believe any of this shit. Don't believe any of it.
Yeah.
Doesn't matter. Yes,
you have to scam. We still get paid.
Liars sometimes.
Yeah. But that's the thing. It's all about trading. You know, like, are you, let's say next year, oh no, let's say Greece falls again. It's like we've been in this trade. It doesn't matter. Like we're going to be out by that point. It doesn't matter. So that's
Vietnam's up 80% off the April lows. People, let them dance.
Man, Vietnam.
Where you been? Where you been, guys? I don't know.
Where's my dong?
All right. What's going on today on the channel? We got Kenny going live at noon. Chart request live at 1. Email your requests to questions at stockmarketmedia.com. We will answer your questions on that show. Ticket requests always every Monday at 1 o'clock. Gold Rush, if you're a member of the Gold Rush, you'll get your video with Jason and Sam. Is that true today?
Yep.
Every Monday.
We got a video today, and our post is going out for our Monday post with a new gold mining pick. So we'll see.
New gold mining picks. If you're not involved, get involved. allstarcharts.com/gold-rush right then and there.
And if you're a precious metals person, I don't know anybody. I think maybe John Salama's been there with you guys. I don't know anybody who has been to gold as early as Jason and Sam, covering it in the gold rush. These guys got you in. They've been covering it for years. They're watching these trends as closely as anyone I know. You guys continue to be right at every turn. Now silver, more participation, the risk appetite. I mean, this is your one-stop shopping for not just precious metals research, but all things commodities and futures trading.
Look at that GLD. Look at that chart of gold right there.
Beautiful chart.
Gold's ripping. Bonds are moving down. And we cover bonds too. We cover any stocks inside of the commodity sector. Like we cover a lot of things over there. Currencies. Rick's been doing some great work with the currency stuff. So, I mean, it's been a lot of fun over there. So definitely join us if you guys get a chance. But either way, members, we'll see you guys today.
All right. Thanks for watching, guys. Go make some money. Thank you, Jason and Alex and Kenny and chat. And Steve, we'll be back tomorrow morning with another new guest on the show. Actually, I won't spoil it, but a new guest. Yes,
today was great. Shout out Alex. I really enjoyed that conversation.
Great job.
Daniel said I need those gold mining picks for my Tinder.
It works.
I don't even know what that means.
It works. He needs a junior, though. He needs a junior now.
You need or explorer, maybe. Just go hard.
All right, adios, guys.
Pause.
I can't take no loss. I don't need